Tesla stock in Friday's trading session had yet another big red day. But what makes this very concerning is that Tesla is at a level that I warned about in a previous video. For example, if we take a look over here, we see that Tesla recently got rejected on this prominent downward trend line that we've had seen Tesla get rejected for a few times now. But more importantly, we see that Tesla is entering into this area where there's a volume pocket, meaning that there's very little volume relative to price. And so if there's a lot of selling pressure around this area with low volume relative to price, well, we could see some rapid selling pressure in Tesla stock and see it basically capitulate.
This is bad.
But the selling pressure isn't just with Tesla stock and Silo. For example, we're seeing a lot of selling pressure take place with the overall S&P 500 index ETF SPY. But now speaking about ticker symbol SPY, I want to highlight a trade that we called out for Friday's trading session. For example, at 2:58 p.m. on Friday, I told the Push and Profit private group that this was an area that was going to be watching SPY towards the close, as it looked like it was approaching a 3-stage reversal. About 7 minutes later after that call out, we saw a nice little pop here, again confirming a classic 3-stage reversal, and I highlighted that I was still watching the move. And about 20 minutes later, we had the move continuously move upwards, making an amazing pop towards the end of the day. And it was just a sign that this was a great 3-stage reversal and patience does pay off. And I also signaled that this was an area to exit on SPY. And right after I called out that being a good area to exit, we saw SPY pretty much sell off aggressively towards the remaining end of the day. And so if you want to get updated on trade ideas as well as getting access to my daily briefings where every single day the market's open, I talk about what are some things that are happening with the overall market, make sure to check out the first link in the description below, because there's going to be a link to join the Push and Profit private group where again you have access to my trade ideas as well as my daily briefings. But now bringing it back to Tesla stock, I want to highlight something I found very notable. For example, I went ahead and I parsed through several different financial websites and I came across an article I found pretty interesting. Now this was an article from Barron's which highlighted that Tesla stock was falling due to China being the main reason. Now this article goes on to say that from June through August, Tesla sold about 13,000 EVs a week to Chinese car buyers. However, September sales have dropped to about 9,000 a week according to insurance registration data collected by Citi. But I want to go ahead and highlight something. See, it makes perfect sense that we're seeing EV vehicle sales decline in China, especially because we recently seen Tesla do a refresh on the Tesla Model 3, introducing the Tesla Model 3 Highland, which is coming out in Europe and China. And so this makes complete sense, because if I was in China and I could afford just a little bit more to buy into the new Model 3 update, I wouldn't want to just buy the Model 3. I'd want to hold off on actually buying the Model 3 and wait until the updated Model 3 Highland version came out. And so again, this makes complete sense. And so what this means is that possibly in October, when we start seeing the delivery numbers for the Model 3 Highland roll out, we'll start to see that trend pick up with more sales in China. But this just shows us that going into Q3, we're gonna have a little bit of a bumpy road, right? Because there's two things we have to consider. Not only China having the updated Model 3 versions, which could possibly make these car buyers in China want to hold off on just buying the Model 3 and really just wait for the new model. We also have to remember that in the last earnings call, Elon Musk highlighted that there was going to be updates to a lot of the factories and that this was going to stifle production. And so this could be something else that could be a concern as we head into the end of Q3. But now something else that's also interesting is that we're seeing this sort of September effect actually take place. Now, if you guys are familiar with the channel, then you guys know that earlier in the month of September, I shared a chart. I believe I shared it not only on the actual video, but on a community post showing how historically September is a very bad month for the markets. Now, I do want to put a little asterisk there by simply saying that historical price action is not indicative of future performance. But one of the things I mentioned in this, phenomenon of the September effect and why we see the market sell off is because there's a couple of things, right? So first off, mutual funds, typically a lot of them will end their fiscal year in September, but also in August, we have a lot of European fund managers who go on holiday, right? Of course, the Europeans get a lot more time off than us Americans, right? And they end up going on holiday, and then as they come back in September, well, that's where we see a lot of price action really start moving in the markets as a lot of positions start getting rotated in. And so it's not that this is always going to happen for every September, but it's just pretty ironic that we're having yet again another September where there's a lot of volatility and a lot of selling pressure. This is why I always put that little warning every single year for September. I mean, I've been doing this for a while now, and every time September rolls around, I say, hey guys, September is coming, right? Now, you may want to, whatever your goal is, whether you're investing long term or you're trading in the short term, take what you will with that information. I know some individuals where every time September rolls in, they go ahead and they actually buy the dip and then they ride it out into the end of the year. Again, you guys have to do with whatever you see value in. But one of the other things I talked about in previous videos is that right now we're seeing the 10-year treasury at these levels that we have not seen since 2007, right? And so this is kind of bad for the stock market. It's really bad for equities when the 10-year treasury is at 4.5%, because myself, if I'm an investor and the market rallied the first half of 2023, everything was good. I mean, you saw what Tesla did in the beginning of the year. We saw what Meta did, NVIDIA. We saw what a lot of these companies did. They performed extraordinarily well, right? Or very well. And so what a lot of fund managers, a lot of these institutional investors may be doing is, hey, taking the profits off the table. Okay, well, the market was really good in the first half of the year. We're starting to see some volatility. We're also seeing the 10-year treasury climb up. Well, now it only pretty much makes sense to take your money out of the stock market, right? For a lot of these institutional investors, and put it in a safe haven where you have this guaranteed return from the US government, where you put your money in these treasuries and you're guaranteed to get a 4.5%. I mean, these are high levels. And then, of course, that's just one aspect of it. Of course, in previous videos, I talked about monetary policy and how we're seeing that the Feds, a lot of the participants in the FOMC are actually, anticipating another rate hike, right? And that's the real concern for the November meeting. Are they going to hike? And so that's why this is going to be an interesting time where we're going to want to pay attention to the data that comes in, especially the job data and especially the inflation data that we're going to, continuously have flow in. And so again, you want to be mindful of the data coming in. In fact, in the previous video, I talked about how the leading economic index, which is a index that in its name is leading, right? It's a leading indicator for the economy, has declined consecutively for the 16th month in a row. Now, this is not good. And so this is what I've been saying to the Push and Profit private group. For those of you guys that are members of the Push and Profit private group and have been members for a while, then you guys know that I've been saying this, that the first half of 2023 is going to be a great half where we have this recovery, because remember, 2022 was very vicious, right? It was a change in the cyclical market, and we had a lot of selling pressure take place, especially for Tesla. I won't go too much into the details why, but there was a lot of reasons why we saw a lot of selling pressure in 2022. And so, I said that 2023 was going to be a year of two different stories, where the first half is going to be very bullish, but as we go into the second half, well, that's where things get a bit interesting. And that's why quarter three is going to be a quarter that we absolutely want to pay attention to, because I believe that a lot more companies are going to have bad earnings. Now, there's a difference between beating the earning estimates that these analysts put out and actually having your earnings grow, right? Because one of the things we saw in the last earnings report is a lot of companies beat their earnings, but there's a lot of nuance when it comes to actually looking into these earnings reports. A lot of people just read the headlines, Apple beat earnings, but we saw Apple sell off in the last earnings report. Why? Because when you actually look at the numbers, iPhone sales weren't that great, right? We actually saw a lot of bad numbers when it comes to the Apple or the earnings for Apple, but it still beat the earning estimates from analysts. But that really doesn't matter when we know that analysts get little tips here and there from companies, and then they start revising their expectations downwards. And so if they keep revising their expectations downwards and then a company beats it, Well, yeah, you beat the earnings, but that's not necessarily a good sign. And so, again, we're seeing a lot of stuff happen in the overall economy. We know that student loan repayments are taking place. There's 45 million Americans who have a median payment of $300 that is now going to have to be additionally added into budgets. And so that's going to put more stress on consumers. And, this all plays into effect. A lot of people often just want to look at one data point. Some people just look at the fundamentals. Some people only look at the technicals. I say, look, you want to look at the fundamentals, you want to look at the technicals, you want to look at the macroeconomic climate, and you guys tell me, when you have the leading economic index telling us that things are not looking good for the 16th month in a row, and again, it's a leading indicator, well, that's why going into the second half is going to be a bit scary. But of course, whatever you do with your portfolio or your trades is up to you, right? And for me, I'm a Tesla bull, and I know that right now, things are kind of getting pretty messy, but I think that there's going to be a huge opportunity to go ahead and add more in as prices start coming down for the long term. Again, I am a long-term investor, but I do also trade in the short term, hence why I have some trade ideas that I shared in the beginning of this video. But at the end of the day, I believe that there's going to be a lot of opportunities, and a lot of people get scared when the markets fall down, but there's this famous quote from Warren Buffett where you want to be greedy when everyone else is fearful and be fearful when everyone else is greedy. Now I'm going to go ahead and end this video right over here, but of course, before you guys go, make sure to watch this next video right over here where I break down the 3 stages of a reversal. See you guys on that next video, and take care.